Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy new month to you guys, as it's a new month. Happy December. Let's embark on a new chapter of trading success together. I wish you all a profitable trades and joyous moment throughout this festive season. So, as usual, let's run through our daily routine. Let's confirm that we are all on the same page. So, if you can see my screen and you can hear my voice loud and clear without distortions, feel free to let me know in the comment section by typing in hi. So once you type in hi, I get a positive feedback that we are good to go this morning. So thank you very much as you do so. So I look forward to your feedbacks in the comment section. And thank you very much as you do so once again. All right, so I think I can see a handful of comments right here. Thank you very much, guys. I really love the energy in the house this morning. Okay, so what do we have here? Isteyak. I hope I pronounced that correctly. Good morning. Thank you very much. Rice Rick, good morning to you. Panoyo621, good morning. Yasineka, good morning to you. Thank you very much. Hello, Max. Good morning to you. Tohit, good morning. Hello, Carrie. Happy new month to you too. Thank you very much. Zaid Ahmed, good morning to you too. Max again, good morning, good morning, good morning. Thank you very much, guys. I really appreciate this feedbacks. I think with this handful of comments, I want to take it as a positive feedback that we are good to go this morning. So I welcome you all once again to yet another promising edition of the Extreme Speed Live, as we are going to be taking another fresh new look at the financial market using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action on all the assets we've been monitoring since the beginning of the week. My own name is Sheriff Daramola. And as we get on into today's trading session, so far this week we have been monitoring four major financial assets, which has been on our watch list since the beginning of the week. And this includes the US All Sport, the USTech100, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, so far this week, we have done very well across the assets we've been monitoring. So today we are going to be delving into the current market conditions to see how this asset has been doing so far for this week, see how we will manage our existing positions, while we also look at the current market structure to strategically position ourselves for today's trading session. Now, I also want us to be aware of how important today is, today being the last trading day for the week and also serving as the first trading day for the new month. Hence, it will come with a lot of drama behind the scenes, as participants in the market will get caught up in the mix of rounding up their positions and also positioning themselves for the new month. For those of you who are joining us for the first time, you are highly welcome on board. I'm very excited and glad to have you around with us this morning. And I know you will be wondering what this is all about. What is this session all about? What is this platform all about? Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. Now, the session usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in throughout the course of the session so you don't miss out on any of the valuable ideas we will be sharing today. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So, with that being said, here let's dive right into the business. And as usual, the first thing we usually do is to check on the economic calendar. And for those of us who have been with me for a while, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, on the economic calendar for this week, we have been monitoring both the United States and the United Kingdom economic features, since this is the economies that affect the assets on our watch list. And yes, and this week so far, we've had a handful of events. We had the GDP data from the United States, which came in beyond expectation at 5.2% expansion. Then we also had comment from the Bank of England's governor, very hawkish comments. Then we also witnessed the core personal consumption expenditure for yesterday's trading session, which happens to be the most preferred inflationary indicator for the Federal Reserve in determining their next policy action. And that also came in just as expected yesterday, which was not a surprise to everyone in the market. And of course, it also further emphasized that the Federal Reserve will be rounding off on their policy tightening measures, hereby inciting the idea of potential rate cuts during the first quarter of next year. Now, today, Friday, December 1, we will be looking forward to two highly impactful events for today. The first one here is coming in about 4 to 5 hours from now, and that is the ISM manufacturing PMI. Now, for those of us who don't know how important this event is, I will tell you here that this is a key economic indicator representing the annualized percentage change in a country's real health of the manufacturing sector by surveying purchasing managers on various business activities. Now, the anticipation of this data can influence market sentiment as it provides insight into the economic expansion or contraction. So, a PMI reading above 50 indicates expansion, potentially leading to positive price action and a stronger US dollar, while a low reading below 50 may result in the opposite effect as it suggests a contraction in the manufacturing sector. Now, if we look at the previous data for the month of October, it came in at 46.7, and we have consensus economists projecting a 47.6 for the month of November. So we have a little bit of positive traction there, but it's still below the 50 gauge, which is considered to be the mark that suggests that the economy is buoyant. So it appears that the manufacturing sector is still struggling. So we still look forward to see what the actual data is going to be on that one. Will it be just as expected, below expectations, or even beyond expectations? Then later on today, we are looking forward to the first German speech. This is coming up in about 7 to about 10 hours from now. And his speech here holds considerable influence over the financial market. And his remarks will be providing us with insight into the bank's monetary policy stance, economic outlook, and potential future policy action. Now, the anticipation of this speech can significantly impact market sentiment as traders and investors will closely analyze the rhetoric for clues about future policy directions. So this is a very, very impactful event, and it is likely going to be causing some choppy situation prior to this event. So we will be taking this into consideration while we review the current market structure. So with the information we have gathered on the economic calendar, let's dive straight into the business. Now, the first asset we will be looking at this morning, as usual, is going to be the US All Sport. And what a wonderful week we had here on the US All Sport. Remember that we have been buying this asset since the beginning of the week after we identified a range. Remember, we saw how price action was initially confined within the $75.75 level, and our key level area around the $75 area and the $74.80 level. Now, with this flat channel here, it gave us an insight into the indecision that was going on in the market at that point in time. And usually, whenever we identify this kind of structure on the chart, we exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. Well, at the beginning of the week, I did mention that I had a sell position triggered, which moved about 80 pips before the bullish momentum came in. Now, we had two buy positions triggered at the beginning of the week, which actually and unfortunately went into a loss. Remember, during our live session on Monday, we decided that we will be buying at the breakout of that resistance line at the $75.75 area. Now, with a buy stop order around that area, we saw the first buy position triggered, which of course went into a loss. Then on Tuesday's trading session, we saw another buy position trigger, and that one also went into a loss. So it wasn't a very good start for us this week, but thank goodness we were able to recoup the loss we incurred at the beginning of the week, as price action did break out again for the third time, and this time around price action continued to climb and find new highs. Then remember that we also had multiple entries like the $76.25 level where we added positions. We also added one more at the breakout of the $77.10 area, and during Wednesday's early hours of Thursday's trading session, we also added another one at the breakout of the $78 area. And during our live session yesterday, we talked about adding one more position if price action ever breaks out of the $79.65 level, which unfortunately did not even move close to that area. And at that point, we begin to notice selling pressure resume in this particular market. And I can remember yesterday I did mention that due to the nature of the $79.65 area, after seeing how this level had been a strong selling niche at some point on our higher time frame, we decided to move all our stop losses on the buy positions to secure them, and let's see how the market will react to that range. So on the US all buy position, we were able to scoop in a significant amount of profit. Now, for the sake of clarity, let us run through how many pips in total we were able to scoop between Tuesday and yesterday's trading session. So on the first buy position, we had about 350 pips move before the bearish momentum came in. We had about 300, and then this one too came in about 200 plus, and then we also had about 120. So we had about 900 total, but when price action took us out of that position, it will have dropped to maybe around 600 to 700 pips, which is not bad at all for the US all assets. Now, if you remember vividly during our live session yesterday, I did mention that if selling pressure persists around the $79.65 area, that is, buyers find it difficult to break through that area, then we might likely be seeing a sell-off, and that we should be positioning ourselves below the $78 area to capitalize on that bearish momentum. And in fact, if you had done that, you will see that price action moved over 280 pips with a single with a double bearish engulfing candle, as you will see here. And for those of you who capitalize on that opportunity as well, well done to you, as this will make you tremendously profitable so far on the US oil for this week. Now, for those of you personally, I'm already out of my sell positions, and in fact, I already have a buy position triggered at this juncture. But for those of you who still have a sell position running, I will encourage us all to either close in on that position or move your stop losses to that area around the $76.50 level. Let's secure this position as we begin to notice the resumption of buy pressure in this particular market. Now, as we prepare for the New York session today, what is going to be our plans for today? How do we intend to capitalize on the next move? Are we going to continue buying, or are we going to get ready to add more sell positions to our existing trade, especially for those of us who still have a sell position running? Well, before we go into the details on the higher time frame so that we can have an holistic perspective into what is going on in the market, I would like to say here that price action has returned into the resistant line of the range we identified at the beginning of the week. Remember, we had the range, I did mention this earlier, as we saw price action confined within the $75.75 level and that key level at the 75 area at the beginning of the week. Now you will see what has happened here. Price action, despite the strong bearish momentum from yesterday's trading session, price action is right back into that range. And one interesting thing about it is that as soon as it got into that range, we begin to notice some buy pressure resume around that area, giving me signs that we might likely be seeing another buying opportunity from that area, especially after considering that area to have a memory for buying power. And look at that, is exactly the same area where we bought at the beginning of the week. Now, during yesterday's trading session, we all knew that the oil prices plummeted more than 2% after the OPEC Plus producers agreed to cut production for the first quarter of 2024. Now, this unexpected drop in oil prices suggests that investors were disappointed at that decision by the agreement by the OPEC Plus to cut almost 2 million barrels per day for the first quarter of 2024. However, signs of recovery emerged during the Asian session, as we saw just exactly around that range we identified at the beginning of the week, and with oil prices trading around the $75 area and the $78.30 level. Now, with the situation we have here, I'm beginning to suspect that we might be seeing the resumption of buying pressure, maybe in anticipation of the second wave of the bullish momentum that started this week. But before we go into the details here, let's run through our 4 hours time frame where we started our analysis for the week. Now remember that on the 4 hours time frame, after we took into consideration the nature of price action for the last 6 to 7 weeks, it was a clear observation that price action has been on a bearish momentum, and interestingly, price action transitioned into a descending channel. So when we connected the series of lower highs, we had the resistant line of that descending channel, and then after connecting the series of lower low, we had the support line of that descending channel. Now at the beginning of the week, something interesting happened here. We saw buy pressure resume around our key level situated at the $75 area, giving us signs that sellers are finding it difficult to break through that area. So it was just more of buying pressure around this area at the beginning of the week, further emphasizing the strength of the buyers around this area. Now, in addition to this observation was this engulfing bullish candle that broke out of the resistant line of that descending channel, which was a beautiful signal that the resistance line may no longer have the capacity to continue to negate the bullish attempt. And from a technical standpoint, whenever price action breaks out of a structure like this, we do expect that some point in time price may likely come back to retest the structure that was broken, where the appearance of buy pressure will incite the next wave of bullish momentum. Now, look at what has happened here in the last 24 hours after the breakout of the resistance line of that descending channel. You will see here that as soon as price got back into the resistance line, which interestingly shares a confluence with the $75 level, which happens to be our key level for the week, we begin to notice buy pressure resume around that area. And in fact, in the last 20 hours, we have noticed buy pressure, which further emphasized that we might likely be seeing the beginning of another wave of bullish momentum. Now, with the information we have here, it makes quite a lot of sense for us to consider buying as long as price action remains above both the resistance line of the descending channel and that key level has a $75 area. Now, if I do want to consider selling the US Oil Spot, I would rather want to see price action take out all the buy positions along the $75 area. As you will see, this level has a strong memory for buying power. So the only condition that will make me want to be selling the US Oil Spot today is for price to drop down the $75 area. And since price is still floating above the 75 area, we will be negating the idea of selling and start considering how we want to be jumping into this buy position. Now, with the information we have gathered on the 4 hours time frame, let's scale down into the 1 hour time frame to understand the nature of price action around that area. So I will zoom right into where our center of focus is going to be for today, which is just exactly above our key level. Now, like I said earlier, you will see that since the impulsive move dropped into this area, we have seen our sellers have struggled to break through the $75 area, and in fact we begin to notice some higher lows evolve here. Now, as a result of this observation, I did have a buy position triggered around the $75.75 level, and for those of you who capitalize on that one, well done to you. We want to ensure that our stop losses are way close to the $75 area, which will be dovetailing to between 60 to 70 pips depending on where your entry point is. Now, for those of us who had missed out on this opportunity, well, let's see how far this momentum is going to go. So we also have another level around the $76.50 area, a level which has been a selling niche during the later part of the New York session yesterday. Now, if price action does break out, retest the structure, I will be looking out for more opportunities to buy. So we have another buy stop order around that area, and let's see how price action will play out here. But one important thing I would like to state here is that as long as price still remains above that $75 area, we shall continue to look out for buying opportunities. Now, if price action continues to climb, we have multiple levels that we will be using to maximize the next move. Personally, I have a buy stop order above the $78 area, and if price action continues to climb, then a breakout of the $79.65 level, that's the highest point price action has been for this week, will be welcoming more buy positions in that regard. Now, there is a caveat to this current structure as we will be monitoring price action here. Now, if price action goes on to break out of the $76.50 level, triggers a buy position, and price continues to climb up, remember that we have the ascending trend line, which was supporting this bullish idea since the beginning of the week. And you saw what happened here yesterday, that price action did break down the ascending trend line at this point. And from a technical standpoint, we may likely be seeing a situation where price may come back to retest the trend line that was broken to incite a downtrend scenario. So what this simply will tell us is that as soon as price action gets close or around that ascending trend line, we do want to be moving all our stop losses, secure the current buy position, and let's be patient enough to wait to see how the market will react to this ascending trend line. Now, if price action gets into the ascending trend line and we begin to see that buyers are finding it difficult to break above the structure, which of course will reflect on the chart as continued selling pressure below that structure, we will be looking out for selling opportunities to the downside in attempt of a downtrend continuation. However, if price action goes on to break out of that trend line and climbs above the $78 level as well, this will further emphasize that buyers are right back on track and price is now back on that same ascending trend line that has been guiding our bullish momentum since the beginning of the week. Then we can feel comfortable having more buy positions running at this particular juncture in the market. So this is how we are going to be managing our positions on the US All Spot for today. As you will see right here, that our center of focus for today is basically between the $76.50 level and the $75 area, where depending on how price action reacts to the structure will determine where price is likely going to be closing for this week. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. This is my view right here. And if you feel that there is an area you need me to clarify for you, feel free to drop your questions in the comment section below. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, after which we will be moving on to the next asset on our watch list for today. All right. I can see a lot of comments here. I can see Rise Rick. Good morning to you, Rise Rick. Scan 1999. Good morning to you. Soel Hamed, Shanu 2020, Dr. 611. I can see your comment right here. Mark Gabriel says happy birthday to Romania. All right, is that the Independence Day of? Is today the Independence Day for Romania? Well, happy Independence to you. Arjun 820, Papastan, Narov, okay. Giovanni 6127, good morning to you. Kimi Jensen, thanks for the compliment. We do appreciate that. Marketa, good morning to you guys. All right, okay. Ify Lucky, good morning to you too. Glad to have you around with us this morning. Well, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the next asset on our watch list. So the next asset on our watch list for today is the USTech100. The USTech100 has one of the most interesting trading setup for us this week, as we had the privilege of joining both buying and selling opportunities. Remember that at the beginning of the week, right here on the 1 hour time frame, we had an ascending trend line which was supporting the bullish idea in this particular market, as you will see after connecting the series of higher lows. And one of the things we agreed here is that as long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying. Then another interesting thing here was the fact that price action was trading above our key level, which was situated at the 15,900 area. And of course, you know how we use our key levels. When price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying. Now, in addition to these two parameters was the fact that price action started the week with a consolidation phase, as we saw price confined within the 15,965 level and the 15,925 area to emphasize the level of indecision at that particular point in time. And of course, you know how we do it in this community. Whenever we see price falls into a range like this, we usually exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. However, since price action remained above our key level, we were looking out for buying opportunities only if price action breaks out of the 15,965 level. Now, we saw what happened here on Monday. We saw the buy position got triggered as we saw an engulfing candle strike out of that structure, giving us about a 85 pips move before the bearish momentum came in. Now, price action came back into the structure, and we of course had a couple of buy positions which unfortunately went into a loss. Remember, we took advantage of this one. It went into a loss. We also took advantage of this one as well, and that one also went into a loss until finally the third attempt was very successful, and since that moment we begin to add more buy position, hereby recouping the loss we incurred at the beginning of the week and made quite a lot of more profit to add on top of it. So we had the 16,000 level marked out for buying opportunities. We added more positions at the breakout of the 16,050. We also added one more at the breakout of the 16,085 area as we rode that bullish momentum all the way into the 16,150 area with about 190 pips on that first buy position, and I think the second buy position gave us about 150, while the third buy position gave us about 100 pips, and the fourth one right here gave us about 70 pips before the bearish momentum resumed right here on Wednesday's trading session. And for those of us who took advantage of those opportunities, well done and kudos to you for being on standby to capitalize on that move. Now, during our live session yesterday, we did acknowledge that price action was ranging since the Asian session, as we saw price confined within the $16,030 level and the 16,000 psychological area. And for the fact that price action was sitting above our ascending trend line, we decided to have a buy stop order sitting above the $16,030 area. As you will see here, we had the buy position triggered, but unfortunately we were taken out of that position in a loss. And one of the things we agreed here during our live session yesterday was that if the ascending trend line gets broken to the downside at any point in time, we shall be joining a bearish move. And look at how it broke down that psychological level, had a $16,000 mark, which interestingly shares a confluence with that ascending trend line. And look at how price dropped significantly. Well, I do hope you took advantage of this opportunity as we saw this momentum slice through our key level at the 15,900, giving us about 180 pips in profit on that first position, while the second position moved about 70 pips before buyers buying pressure resumed in this particular market. And I do hope you moved your stop losses accordingly. Like we usually mention in this community, that as soon as price action moves significantly well in our favor, we move our stop losses and secure the position. If you have done that, you must have been taken out of this position with a reasonable amount of profits, and well done to you for being on standby to do that. Now, with the situation we have right now, how do we intend to capitalize on the next move? Well, we have to take into consideration that we're looking forward to very high impactful economic events. For today, we have the first chairman speech coming up much more later in the day, and we also have the um, ISM manufacturing PMI, which is coming up in about 4 hours from now. So these are very high impactful events, and of course the anticipation of this event usually affects the market sentiment, which of course will reflect on the chart as price action. Now, before we go into the details for today, I would like us to run through the higher time frame so we can see what is really going on in the market from an holistic standpoint. And for the sake of those who missed out on our earlier editions, they can also be on the same page with us. Now, going up into the higher time frame, this was where we started our analysis at the beginning of the week. So after taking into consideration the nature of price action in the last 4 to 5 weeks, we were able to identify a bullish momentum. As you will see here, price action interestingly transition into an ascending channel. Now, after connecting the series of higher lows, we have the support line of the ascending channel, and after connecting the series of higher highs, we have the resistance line of that ascending channel. And of course, we do know that if price remains within the ascending channel, we will continue to look out for buying opportunities in this particular market. Now, in addition to this ascending channel was our key level, which was situated at the 15,900 area. Now, one thing that made us to use the 15,900 as our key level was the fact that this level here had played a major role in determining the direction of price action in the last 2 to 3 weeks. Now, if you go to as far back as the mid-month of November, we saw how this level was a selling niche at some point before price action broke out of that structure. And since the breakout happened during the third week of the month of November, we saw how price action remained above the 15,900, further emphasizing how sellers have found it difficult to break through that area. And in fact, if you look at what happened yesterday after this strong impulsive bearish leg, we saw that despite that move, sellers are finding it difficult to settle below the 15,900 area, which for me is a sign that buyers are still have a say in this particular market. Then another thing I would like to call our attention to is the fact that price action did break down the support line of that ascending channel right here with an engulfing bearish candle. Now, the breakdown happened in such a way that it came back into the key level, find buy pressure around this area. Now, the question going into the New York session today is, will this buy pressure here incite an opportunity for buyers to come back and retest the ascending trend line that was broken to incite a downtrend scenario? That is one situation we will be looking at today. Or are we going to be seeing price continue the downtrend if it breaks back down the 15,900? Now you will see that we are at a crucial juncture in the market where we need quite a lot of patience to see if we can identify a setup that will help us position ourselves for the next big move that will happen today. Now, with the information we have gathered here on the higher time frame, I want us all to scale back down into the 1 hour time frame to see how the market will be reacting to the structure during today's trading session. Now, scaling back down into the 1 hour time frame, we will begin to see things more clearly. Now, let me go to the beginning of the week. Now, remember that at the beginning of the week, we identified a range which was within the 15,965 level and the 15,925 area, which actually helped us to guide our bullish opportunity as soon as price broke out of the 15,965. Now look at what is happening right now. Price action is back into that zone, and since price got into the zone, we saw it break down the zone right here, break down the support line of that range, and price appeared to have come back, retest the zone. As you will see, selling pressure resumed during the later part of the New York session stroke the Asian session around this area. Now with the resumption of selling pressure around this area, will this be a situation where the breakdown of the structure will transition into multiple rejection here to incite a downtrend scenario? So that is what we are going to be looking at today, as our center of focus for today's trading session will basically be between the 15,965 level and of course the 15,925 area, as you will see here. So what I will be doing now is to extend the support line of that range back into the structure, as we will be using it to guide our trading decisions for today. Now, if we consider the impulsive bearish leg that happened yesterday, the first thing that will come to mind is to start considering selling opportunities. Now, if we do want to sell the USTech100, I would rather want to see price drop back below the 15,900 to give us an opportunity to join a downtrend move. However, I'm also considering if it's possible for us to join a sell momentum even before the breakdown of the key level happens. Now, with that idea in mind, let's see if we can see some lower lows and lower highs below the 15,925 area, maybe on our lower time frame. Then that will give us the confidence to join, after which we can have a sell stop order below the 15,900 to join the downtrend scenario. Now, if price action continues to drop to the downside and breaks down the 15,830, which happens to be the lowest point price action has been for this week, then we want to be adding more positions to our existing sell positions. So this is what I will be looking at to sell the USTech100 today. So let's keep this in mind, mark out these levels on our charts to join the downtrend continuation if that is going to be the case for today. Now, you know how we do it in this community. In as much as we're looking out for selling opportunities here, we cannot ignore the potentials that buyers could still come in. Of course, when we looked at the higher time frame, it was more of a bullish momentum in the last 4 to 5 weeks. Let me show you one more time. It was more of a bullish momentum, and in fact, we were able to see an ascending channel in that regard. Now, will the breakdown of this ascending channel on the 4 hours time frame turn out to be a false breakdown? If it's going to be turning out to be a false breakdown, then we might likely be seeing some buy pressure climb up. Now, let's scale back down into the 1 hour time frame to see what is really going on here. So I will just zoom right into where our center of focus will be for today. Now, if price action will be able to break out of the 15,965, remember this was exactly the same level where we bought at the beginning of the week, which now has a memory for buying power, then I want to be buying above that area. Now, when we buy above the 15,965 area, we want to be very cautious here. Remember that we have this ascending trend line, which was supporting our bullish momentum since the beginning of the week around this area. So if price gets into that area or close to it, we move all our stop losses, secure the current buy position, and wait to see how the market will react to that trend line. Now, if buyers find it difficult to break above the trend line, then this would reflect on the chart as continued selling pressure below the structure to incite a downtrend continuation. However, if price action breaks out of that ascending trend line, then we are going to be back within the buyer's territory, where we shall be looking out for more opportunities to add more buy positions to our existing trade. So it's a very simple setup we have here, where we shall be looking out for buying opportunities if a breakout retest of the 15,965 happens, and if price goes on to break down this level and our key level to the downside, we look out for selling opportunities. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever as regards to this current setup, and if you probably need some clarifications to whatever I said so far, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. So I see a couple of comments here. Heggy, good morning to you, Heggy. Mr. Zul says hi, peace upon you. Peace upon you too, Mr. Zul. Kike88, good morning. Thank you very much. Kingdom says, I love you. Well, I love you too. Kimokoma82, okay, good. Okay, good morning to you. Thank you for your compliments. I really appreciate that. So, in the absence of no further questions, I'll take this as a confirmation that we are all on the same page, and in that regard, we just move on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, that is the GBPUSD, which has been doing pretty well for us since the beginning of the week. Remember that we were buying this asset after price did break out of the 1.26110 area, a level which was the resistant line of that range we identified at the beginning of the week. Remember, we had this range identified where price was confined between the 1.26110 level and the 1.25910 level to emphasize the indecision going on in the market at that point in time. And in addition to that range, remember that we spotted this ascending trend line which helped us to guide our bullish ideas during the first half of the week, which helped us to capitalize on that move. Now, because of the fact that price action was above this ascending trend line, we positioned ourselves just right above the 1.26100 area to capitalize on the bullish move. We also added positions. We had the breakout of the 1.26270. We joined that momentum all the way up. We also added one more, had the breakout of the 1.26380, and we continue to add more positions as we rode it all the way into the 1.27100 area before that bearish momentum came in. I think we were able to scoop in about 300 pips on the GBPUSD before the bearish momentum came in to take us out of all the buy positions as at Wednesday's trading session. Now, during the Wednesday's trading session, we begin to notice the appearance of a reversal setup, as we saw how the area between the 1.27330 level and the 1.27100 area became a strong selling niche as buyers found it difficult to break through that area. Now look at what happened here. Every attempt by the buyers to break through was met with strong resistance from the sellers at every point in time. And in fact, the inability of buyers to find a new high resulted in a series of lower highs, giving us a beautiful descending trend line to guide our trading decisions for Wednesday's trading session. And we did agree here on Wednesday that if price continues to trade below this descending trend line, we shall be looking out for selling opportunities. Now, in addition to that, we also observe the appearance of a reversal pattern in the form of a double top structure, and immediately we saw this, we identified the neckline of that reversal pattern exactly within the 1.26870 and the 1.268 area, waiting for the breakdown of that structure to give us an opportunity to join the bearish momentum, which was exactly what happened yesterday as we saw price move over 85 pips in that bearish direction. And I do hope you took advantage of that opportunity, as if you are taking advantage of that move, you must have moved your stop loss like we always preach here in this community, and you must have been taken out with a reasonable amount of profit on that one. And for those of you who capitalize on that move, kudos to you for being on standby to join that move. Currently, I have a buy position running, and as a result of the continued buy pressure observed here, I took advantage of that move. So I will be sharing with you in a moment what led to the idea of buying that asset. So we will quickly run through the higher time frame to have an holistic perspective into what is really going on in this particular market. Now, with the way things are going here, if you look at that area around the 1.26110 area, you will see that the GBPUSD is exhibiting signs of recovery, and this upward movement may be attributed to the asset's resilience against a weaker US dollar, which was fueled by subdued US Treasury bond yields. Now, the pound sterling appeared to have received additional support from hawkish signals sent by the Bank of England's officials throughout the course of this week. Now, the anticipation that the Bank of England will sustain higher interest rate for another extended period of time, especially considering the inflation that is currently more than twice the central bank's target. This for me is a sign that investors will want to be coming into the pound sterling to put their funds in there to capitalize on that higher return on investment they stand to gain if interest rate is increased further. So as a result of this, I still hold on to a bullish bias today. And another thing I would also like to emphasize here is that the market participants are currently awaiting key indicators such as the nationwide house prices from the United Kingdom and the United States ISM manufacturing PMI for the month of November. And additionally, all eyes will be on the US Federal Reserve Chairman Jerome Powell's speech for crucial cues into how to position for today's trading session. Now let's run through the 4 hours time frame and let's look at things from a technical standpoint and how these fundamental factors may affect the market sentiment today. Now on the 4 hours time frame, if you remember, we talked about this at the beginning of the week where we saw how price action has been within an ascending channel in the last 8 weeks, I think, has been within an ascending channel. And after we connected a series of higher highs, we have the resistant line of the ascending channel. And when we connected a series of higher lows, we had the support line of that ascending channel. Now, I would like to extend the resistant line of this ascending channel so that it can capture all the recent price action. Now, look at what happened here during the course of the midweek. Let's zoom right into the current structure. As you will see, price action did break out of the resistant line of that ascending channel. Now, it broke out of that structure, and everyone will have thought that price will come back to retest it to incite an uptrend continuation. But instead, we saw what happened here. Price dropped below the resistant line of the ascending channel, coming back into this area, and look at what we have here. We have a little bit of consolidation phase here, which emphasized the level of indecision going on here. So let me extend all these other ones too, so that we can use it to project the potential direction of price action. So now that price action is back into the resistant line, are we going to be seeing a situation where price will drop maybe back into the trend line or the major support line of the ascending channel in an attempt to join an uptrend continuation? And if we look at that, we will be looking at a minimum of 80 pips to a maximum of 150 pips to catch if price drops to the downside. Or are we going to be seeing a situation where price will break back above the resistance line to continue an uptrend move. Now, with this situation here, I would like to mark out a level along the 1.26675, which is likely going to be playing a major role in determining the direction of price action today. So you want to be marking out this 1.26675 level on your chart right now, as we will be needing it as a reference point to guide an uptrend situation. Now look at how the 1.26675 shares a beautiful confluence with that resistant line of the ascending channel, and in fact, since price broke down the 1.26675, we saw that buyers are still struggling to break out of that structure. So for me, I think that if price can break out of the 1.26675, we are likely going to be seeing a buying opportunity. Now let's scale down into the 1 hour time frame, where we will begin to see things more clearly. Now on the 1 hour time frame, zooming into what has been going on here since the New York session yesterday. Hold on a second, I want this to come into the screen. So we shall reduce this into, okay, beautiful. I think it's okay right here. All right, so we zoom right in and look at what has been going on here since the New York session yesterday. Ever since price action came back into the 1.26110 area, we begin to notice buy pressure resume around that area, giving us signs that sellers are finding it difficult to break through that zone. Now, what makes this very more interesting is the fact that price action is back within the range we identified at the beginning of the week. Now, remember that the breakout of the resistant line of this range was what triggered our first buy position for the week, and right now that price action came back into the structure, we saw the emergence of buy pressure again. Now what does this tell us? It tells us that buyers are coming back again to resume the momentum it began at the beginning of the week. Now look at what has been going on here. The attempts, the subsequent attempt by the sellers to break through was failed at every point in time, resulting in a series of higher lows. Now with a series of higher lows here, I was able to spot an ascending trend line, which we will be using to guide our trading decision for today's trading session. Now with the situation here, it looks more like price action is going through a reversal pattern in an attempt to continue the uptrend momentum that started this week. So what I did this morning while trying to decipher what price will be doing next was to mark out this key level at the 1.265, that if price breaks out of that structure, I want to be buying. So I had a buy stop order triggered at the breakout of the 1.265, though price is back into structure. Well, usually when we have this kind of situations, we expect price to come back and retest the structure. It might even come back into the ascending trend line. But most importantly, we want to see signs that sellers are finding it difficult to break down the ascending trend line, which would make it very viable for us to join an uptrend continuation. So for those of us who had missed out on the 1.265, we can still place a buy stop order above the 1.265 and ensure that you have your stop losses way below the ascending trend line to protect your portfolio against sudden pullbacks. Now, if price continues to climb, we have another level at the 1.26675 to join the bullish opportunity. Now remember, this was the level I identified on the 4 hours time frame, so we will be looking out for adding more buy positions here. And if price continues to climb, we have the 1.268, we have the 1.271, all of which, if price continues to climb, we will be adding more buy positions to our existing trade. Now there is a caveat to this buying opportunity here if price continues to climb new highs. Now if price continues to climb new highs and break out of the 1.26800 level and it gets into this ascending trend line here, remember we had this ascending trend line which has been supporting our bullish idea since the beginning of this week. Now we saw this trend line broken during yesterday's trading session, and from a technical standpoint we could be seeing price retrace back into that structure to incite a downtrend move. So as soon as price gets into that area, move all your stop losses, secure your position so that if buyers find it difficult to climb above, we might be getting ready to join a decline to the downside. However, if price breaks back above the ascending trend line, then we will be back within the buyer's territory to incite an uptrend continuation. So that is how we are going to be buying the GBPUSD for today. Now, in as much as we are looking out for buying opportunities, we cannot ignore the potentials of sellers. Of course, this is how we do it in this community. We want to keep a balanced perspective ahead of the New York session. Now, if it so happens that price action continues to drop to the downside, personally, I would like to see price take out the key level at the 1.26 area before I want to be joining a decline. However, I still think that we can join a decline even before the breakdown happens if we see a breakdown of this ascending trend line and we see how sellers continue to gain momentum with the series of lower lows and lower highs here. Then we can join, then have a sell stop order below the key level to maximize the potential of that bullish move, of that bearish move. So this is how we are going to be managing our positions for today. So at this point in time, like I told you earlier, I'm holding on to a bullish bias as long as price remains above that ascending trend line, where I will be looking out for more opportunities to buy at the 1.26675, 1.26800, 1.27100 if price continues up. But if it breaks down the ascending trend line, then we will begin to start considering selling the GBP USD. So these are my views here on the GBP USD. If you have questions, let me know in the comment section. And unfortunately, I wouldn't be going for a break at this point because of the time. I'm already out of time. So I will want to run through our last asset for today, which is of course my favorite asset, and that is the XAUUSD, popularly known as the gold spot. Now, on the XAUUSD, we have an interesting situation going on in this market. Remember that we have been buying this asset since the beginning of the week, where we were able to scoop in over 750 to 800 pips in profit after capitalizing on the breakout of the $2,013 area at the beginning of the week. Now, for the sake of those who are not part of our live sessions at the beginning of the week, let's run through how the week started for us here and what led to the decisions of buying. Now, the first thing we observed on the higher time frame was the fact that price action had remained above this ascending trend line in the last 6 to 7 weeks, giving us a situation where buyers are likely going to be pushing price to the upside. Now, in addition to the ascending trend line was this range we spotted at the beginning of the week, where price was initially confined within the $2,013 level and the 2,050 cent area. Now, we saw this range here, and because of the fact that price remained above the ascending trend line and our key level at the 2005, we decided to trigger a buy position at the breakout of the 2013 level. We capitalized on that opportunity. It took quite a while before the momentum was built on. Then we added more position at the 2018. We also added one more at the 2028 level. And I think we also added one more around the 2030 and 40 level, maximizing the bullish move to the upside. So we scooped in a significant amount of profit on that one. Then just like the GBP USD pair, we saw that as soon as price action hit a new high at the $2,050 area, we begin to notice sell pressure resume around that area. Now, this did not come to us as a surprise at all, as we all know that from a psychological perspective, when price action finds a new high, we usually see the dominance of the emotions of fear come into play, as those who had bought at a cheap price out of the fear that the market may crash from this level because this is a new high, they start closing in some of their positions. And when they do this, we usually see this effect reflect on the chart as retracement phases, consolidation phases, and choppy situation, which was peculiar with this market in the last 2 to 3 days. Now we saw how price went into a range and in fact transitioned into what was looking like an uptrend continuation pattern that we identified during our live session yesterday. So we saw something like a pennant here where we were waiting for the breakout of the resistant line of that pennant to give us an opportunity to buy. Now, during our live session yesterday, we talked about the inability of buyers to break out of the 2050, which resulted in the series of lower highs here, giving us this descending trend line we marked out here. Now, with the situation, we were looking out for selling opportunities, and of course, we did capitalize on bearish opportunities, had the breakdown of the 2040 as you saw here, but unfortunately for us, price action buy pressure resumed again and took us out of that position, leading to the breakout of this resistance line here. Now, for those of us who took this one, well, I also took it. Price did move significantly, but right now is back into the entry zone, giving us some losing position right now. I think we're running with about how many pips? Okay, about 10 pips loss right now. So let's see how the market will react to the structure. But personally, I still think that the market sentiment is still looking very, very bullish, especially if we consider a lot of fundamental factors behind the scenes that are driving this sentiment. Now, the weakened US dollar is one of the culprits here, and the declining US Treasury bond yields are contributing to an uptick in the safe haven asset, especially during the Asian session. However, it is crucial to highlight that despite this upward movement, price action still remains below the $2,050 area, and of course this descending trend line we marked out here, which further still give us the idea that we cannot negate the potentials of sellers to come in at any point in time as long as price remains below the descending trend line. So at this point, the price still hovering within a striking distance of the highest level, as we can see here that since yesterday's trading session, price action has been confined within the $2,037.50 level and the $2,050 area. In fact, since the beginning of the week, price has been within that range to further emphasize the level of indecision in this market. Now, the US macro data released yesterday provided further indication of easing inflationary pressure in the United States and a slowing labor market. Now, these are strengthened speculations that the Federal Reserve will maintain steady rates and potentially initiate rate cuts in 2024, a scenario which usually favor safe haven assets such as the gold. Now, as we anticipate the US ISM PMI data and of course the federal chairman's speech coming up later today, we will be caught within an indecisive phase, which is always peculiar with major events as this. Now, with the situation we have here, we might likely be seeing some consolidation phase before this event will happen. So we want to be taking this into consideration while we also monitor price action. Now, in that regard, our center of focus for today's trading session is basically going to be between the $2,046 level and the $2,037.50 area, where depending on the direction of the breakout will welcome an opportunity for us to trade. Now, price has broken out of that descending trend line, which is right here, which also serves as the resistant line of the pennant pattern we identified earlier. Now, with a breakout of structure, we do expect that some point in time price may come back, retest the structure to incite an uptrend continuation. So with this in mind, I'm of the opinion that if price action still remains above the 2040, we still maintain a bullish bias as price goes to come back into this area and develop or transition into a reversal pattern to incite an uptrend move. So I still remain bullish as so long as price still remains above the 2040 area, and if price continues to climb new highs, break out of structures such as the $2,046 level, and the highest point for this week at the 2050 will be welcoming more buy positions in this particular market. So that is what I will be looking at to maintain a bullish bias on the XAUUSD. However, if price drops below this descending trend line, it will increase the chances that sellers could push price further to the downside. And in fact, the inability of buyers to break out of this high is not helping matters at all for the buyers. As you will see, in the last 3 hours, we saw another sharp rejection of that area. Now, if this sell pressure persists, we might be looking out for selling opportunities at the breakdown retest of the $2,037.50 level to join that decline to the downside. So this is what I will be looking out for to sell the XAUUSD. And like I said earlier, our center of focus is going to be between the $2,046 area and the $2,037.50 area, where depending on the direction of the breakout will give us clues into where price is likely going to be closing for today's trading session. So I encourage us all to mark out these levels on our chart, as we will be needing it as a reference point to guide our independent trading decisions for today. And in fact, I can see that we have another ascending trend line right here, which could be serving as a guide to these current buy positions we have right now. So let's see how the market will play out from here. This trend line here, price remains above this trend line just like it has been doing since yesterday. We maintain the bullish bias, so we're still looking out for buying opportunities. So let's see how the market will play out. If you trust me, if you can exercise patience and allow your structures to mature, you will definitely be on the positive side of your portfolio by the end of today's trading session. So it's on this note I will be rounding off for today's trading session. It has been a wonderful moment with you guys. I really appreciate the energy in the house today. You guys have been wonderful. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us, the better you will become in understanding our analytical approach, and eventually be able to use the information you gather here to make your own independent trading decisions. So far this week, we've monitored 4 major assets: the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which we've done very, very well. And we hope to replicate what we've done so far this week today too as well. Remember, every decision we make in the financial market is more or less an educated guess. So it is very, very important for you to ensure that you have a well-defined risk management strategy, which you want to be using consistently throughout all the positions you will be opening from your portfolio, as this will go a long way in allowing you to still be in the market to trade another day. And it's on this note I would like to wish us all the best of luck today. Happy new month once again to everyone. And in fact, I look forward to seeing you guys same time on Monday morning as we come here again to review and get ready for another interesting new week. Do have a wonderful day, everyone. Happy new month to you. Do have a wonderful weekend. Trade smart, trade consciously. Bye-bye.